What is going on, everybody? And no dog today. He is, I think, being a menace outside the door, but instead, I bring to you, wrong way, football with an autograph of a guy who's no longer on the team, James Casey. I think he's a high school coach now. But anyways, big playoff game Sunday night. Go Birds. Go beat the Packers. So I'm going to be pretty sad on Monday. There were some sad parts of the market today. We were talking about last week. This is not just a straight up buy calls environment. It was going to be messy. Today you had a kind of ridiculous sort of made up number, I suppose, is what people think of these labor numbers, the employment data. So unemployment went down. It was a great number for the market. And what happened? Obviously, we sold off because we're addicted to Fed cuts and things like that. And it got a lot of fear in the market. We'll take a look at exactly what happened today. So we'll see what's going on with the markets. It was actually a very global outlook today. What moved today was China, India. You'll take a look. Japan was a big mover. If we have a time to get a look to it, time to get a chance of looking at it. So let me first share the screen, and we'll look at all things important this week. And it might not be what you think, to be honest with you. So here is your graphic here. Pretty nice. So today, and this really was the summary of the day, end of the week. There's a lot of things that moved today. China, India, and financials. All lower on that number is an interesting reaction. We'll take a look more so at the longer term charts instead of the intraday for these folks, but all of them were down 2 to 3%. You have Baidu hitting 52-week lows. TLT hit a new 52-week low, which means higher rates. As you see, the 10-year going past 4.7, and the 30-year actually touched 5% today for the first time in years. And you got your Russell down 2.5% nearly, and oil jumped 4% today. Oil was a bright spot. The nat gas, those things were moving. And this week, when you look at it, when all said and done, a 9% rally in nat gas. We called for it literally 1 week ago in this very show. We said it could be a spot. It's had a volatile week. We'll look at the chart. But overall, on the week, a crazy week. It is the top dog up 9%. And then we had a jump in volatility, most of it coming through today. We'll take a look at that. And again, a big global drop for India and China, about 4.5% for the two of them on the week. So not too fun if you're in those areas. First, let's get started with intraday chart of the SPY here. Hang on, let me show my appropriate screen. Let's go Birds. Let's go Birds. Anyone in the chat? No? All right. If you have a ticker or anything like that, we will look at that as well. Boobity bop. All right, so really fast, just highlighting some big movers. So NVIDIA, that didn't help, down 3%. Apple down 2.5%. So everyone's a little bit poorer than they were yesterday. IWM, as I said, down 2. AMD down 5. That continues to be a dog, and I think is a fresh 52-week low. I would not buy that stock. Don't go bargain hunting in there. Amazon down 1.5. Microsoft down 1. Palantir down again, down 1. So a lot of moves. So looking at the intraday. So here the number came out. So you could see, I'm going to round for simplicity's sake, but we were at 587 before the number, and then we sank pretty much to 582 immediately following, and we continued to go lower, all selling bars all the way to about $12. We hit our bottom right around 578.5, and pretty impressive trading. We got all the way above that orange line, very important, volume weighted average price, and today we actually had 20% above average trading as viewed through the SPY lens, and a lot more in your single stocks. So we actually had a nice rise all the way here to about, it lost speed at about 584, right around the 2 o'clock hour. We peaked, and we started selling off again. And actually at the 3 o'clock, we went below VWAP, and a nasty close, I would say, trading to about 580 under the 581 half VWAP. So as I zoom out here, it was the all-important Trump, let me see if I can say this right, the Trump bump gap got very close to holding here. Again, if you recall, that gap exists right here. Okay, so I'll go with the open the day after. On the 6th, we opened at 589. The low that day was 585, and we're below it here. We're at 580. So I'm talking about the previous day, the 5th gap right there. We went up as high as 577, and that's what you're holding in now, those $3. We came close on Christmas week, the week of the 20th, and we pierced it basically on the 2nd, and now we're coming close to it again. You're getting a little vol expansion here. Basically, as I said before, to keep things simple, and sometimes it's really important if you're getting trigger happy, to keep things simple, the rising 200 moving average, which it has not closed below once this year, So you got to give, Shea of the Thunder, if he has a 2-point game, you're going to have to be okay with that considering his average, right? So all that being said, I kind of will forgive anything down to about at least one close under 555 because that'll tell me institutionally, retail, everything, something has changed under 555. Simply, I don't think we're getting there. But what I do think is going to happen for the next 1 to 2 weeks is more messiness. I think we're going to burn a lot of energy going sideways and so forth, all the way to get to 595. And I don't know when that clears. We are in the middle or at the beginning of earnings. So that typically, will follow, will add analyst revisions and then potentially more chasing and then year-end targets going higher. We'll see if that's the flavor, to kick off this quarterly earnings. But I do see us getting to about 595. There's pretty heavy resistance at 600, so about that. So that's about it. So just be aware, we're still going up, but probably, or maybe just not the slope of last year of, seemed like clockwork 2% per month. I'm not so sure that is what's happening right now. We're at least basing and having a rotation between sectors. Healthcare is not the game anymore. Semis have obviously lost some wind. So there is a rotation going on underneath the hood. And we'll see some of those areas, what's going on right now, actually. So we'll go to the first one. Oil. If you're in oil today, we've been talking about this. We said it's going to be frustrating for investors in the short term. Oil up today, 4.3%. So let's take a look at this because there's a sea change happening with the 200-day moving average. As you can see here, pretty much kind of a brick wall, very little. You can see my cursor here. I'm on it here. It is a flat 75.38. And it's been that essentially since the beginning of November. So really, in terms of oil, that this has served as resistance all the way up until New Year's Eve, and now it's kind of holding as a floor. I think this is a little bit over its skis. Obviously, a little bit today was the fear was inflation's here to stay, and the Fed is kind of okay with 3% inflation as we had not a great number this morning, and it's scaring bonds. So all that being said, I think this is going a little bit too much. I don't think this closes above the Bollinger Band too many times consecutively, given its track record. Very curious to see where it comes down in about 2 weeks or so. I still think it comes down to about at least 78. It's an interesting breakout above 79. But again, today was a big day. It went from 79 to 82, essentially, to close in the middle at 80.5. We'll see. That this was also other thing that's popped out here too is the most overbought condition it's had since March. So always interesting to see something like that when people bid something like this up. But still, to me, essentially range bound to the 52-week high on this coming in April of last year at $83. So we're $3 away. We'll see. I think this is a bit much. This has been a beautiful run, honestly, that started about, right back here, December 6th, if you go long enough, for about 5 weeks. This started at $70 and went all the way here. This kind of renewed strength at December 31st. Let's see in about 2 weeks if the $75 holds. I'm curious. I think it will, but it might have a little bit more zig and zag underneath. But today, oil, one of the few bright spots. Next, nat gas. Nat gas, a big mover today. Let's take a look at that. Up 8% today. A crazy thing this week in nat gas. So this started for me December 20th, a new regime almost in natural gas. I'm saying, okay, let's see if it can hold that 1530 level. And it actually has, and it's done very well here. The 200-day moving average is still rising, albeit a penny a day. I think they're actually, so again, the day started December 20th. I ideally want to see where this is by the end of Jan, give it that 6-week test or so. But I think this could be, if you can get this around $15.75 to $16, I would even pursue a long position in this. I can't believe I'm saying it, but the market has different rotations underneath the hood, and this chart is not the worst thing. The slope of the downside obviously is nowhere near what it was, and is actually nicely holding at 50 RSI largely since early to mid-December. Not a ton of assets can say that. So don't hate the chart. I think there is room for this in our portfolio if you get in the right level. I wouldn't chase it up here with an 18 handle. That's kind of my target, to be honest. Like in a 2 to 3 week range. If you can get in at 15.75 to 16, I'll look for that myself. The reason why I'm not writing it in my pad right now is because I don't think that'll happen so quickly. But then again, this thing moves. You saw it move up 8% today. It can happen quickly. The next thing, only one other area really that was up big today. the thing I've been touting, airlines. It was the third best trade of all of 2024. I was talking about it on Wednesday for quite a bit. If you were on that CMT webinar on Wednesday, Coolio, we were talking about it. Delta said they had crazy demand, and they're having surging demand for next year for premium products. So I'm guessing people would love to pay, $40 for a second of Wi-Fi, and they're just going to continue selling it. And drinks, sure. So 52-week high. What other areas can you say that about today, right here, right now? Up 1.7% for the Jets. I've been saying before, don't chase it, but it is a great looking area to be in. You had a great opportunity 2 days ago to get this around 25 even. I would, calm yourself and wait for a good entry in here if possible, maybe around 25.40. I would wait for a bit of a pullback. Today was a nice rally. I was glad to have been in it, especially on a red day, since there are a lot of negativity today in the marketplace. Now, let's go to some of the areas where I think may be surprising of where the weakness really was. KWEB and FXI, these were synonymous. They were both down about 3%. I'm going to look at the KWEB. This was down 3.2%. We were warning about this before, saying, is this the end of the China rally and the stimulus? So similar to what I said about net gas, and the sea change is happening here. So something significant happened December 30th for Chinese internet stocks. It closed on their 200-day moving average. Not a great vibe at all. These things have really started to drop. I'm a bit surprised. And again, in terms of holding the gap, pretty important. That stimulus was announced right here. So it's actually come down and filled that gap almost to the penny. That's kind of what I'm seeing in the United States. I think SPY could have the potential to do the same thing. And if so, that's 577 in the SPY, which in the chart we just showed before. KWEB just did that. And this sometimes is happening, or it's typical in especially in momentum. And naturally, you want that gap to be filled. That price discovery has to happen. What I don't like to see here in KWEB is oversold conditions, essentially for only the second time all year outside of the end of June. But at least here, it just basically closed at the 200-day moving average, and then a month later went below it. Here, it's already had 5 days underneath it. Don't love that. It has been hammered recently, 3% today alone. I think in the short term, I think this rallies to about, I think it actually gives people a headache and gets above this 200-day moving average and gets as high as 29.50, and then starts going like this again around that 200-day. So China, and are we looking at FXI later? I'm not. Oh yeah, we're looking at MCHI. So we'll look at the nation as well. Chart's going to look similar, but not looking good. This group looks like it peaked in October. For right now, the 200-day moving average is still going up because it's such an amazing slope. In 1 week's time, it went from 25 to 39. For goodness sakes. So we'll see what happens here. I expect a bounce in the next 2 weeks, and potentially that is your entry to sell, opportunity to sell. Next, another loser today, a big loser. Again, they came globally here with the dollar, a big move today after that jobs number. India, talk about a group that peaked in September. This was a bad trade by me in the fall. Absolutely, I think I bought it maybe a month before and just did not manage risk properly, and this thing completely just gave way. This is an annoying, confusing chart as well. The 200-day moving average is now it's stalling at 54.87 to be exact, and it had a little bit of this oopsie. This to me, I'll forgive it. The close is beneath it, and here for me, December 17th is really where this is on the clock. I also don't like where India is here. It's in no man's land. It's essentially holding this 51 level, which is support going back to March. So precarious position. Don't like it here. Has not been in favor with investors. Really ugly oversold. Also, the RSI is the lowest on record. So this to me looks like there's going to be more selling. And I don't like that there's no real support right here. This could easily slip further. India, not so great right now. So let me just pull this up here. Yeah, this one, like I said, so this is a first close December 17th. I give it about 6 weeks. That's more than enough time for me to, really see where it is on the defensive side. And that for me is, end of January. And this is getting further away from the 200-day moving average. I think this potentially rallies to 53.5. And this continues to serve as the ceiling. That 200-day moving average is going to be heavy. I think this potentially goes a little bit lower first and then goes to 53.5. But no bueno in India. I'm glad I got out of that trade. And sometimes options expiration is one of the only savings grace if you're stubborn. The calendar takes you out if the market makers don't. Okay, and then next today, another loser. XLF Financials, big move lower, down 2.5%. This group peaked literally, was that the day after Thanksgiving week at 51, almost $52. And now we've quickly come back to 47. A superstar profile, though, never oversold all year. Not one close over a rising 200-day moving average. And this, sometimes you have a precursor, and this is exactly what I'm saying. This is essentially come very close, very close. We'll see if there's more selling on Monday. And some of financials reported today. I know Jeffries was down 10%, but this is very close to filling in all of its Trump bump. And this was supposed to be one of the major beneficiaries of the Trump election. So some things like that let me know there could be more downside to the S&P, like another percent, but it's going to feel painful to see that gap filled potentially. But a superstar profile, rising 200-day moving average. This is a bet you would want to take. This you have to give it the benefit of the doubt. This hasn't even had, a precarious year. Just don't be shocked if it has another rough 2 weeks or so. I think you have a little bit potentially to go. Maybe it gets to that 46 handle, but it should hang tight right around this 47, and the potentially rallies take you to 49. So financials are definitely worse spots to be in than financials. All right, top three gainers of the past 5 days. No repeating charts. Number one, we said when positioning sometimes gets unleashed, big moves happen, and it's nat gas up 8.5%, the biggest mover this week. 8.5% in nat gas. Congrats if you caught it. A lot of it was today, but congrats. Next one, and this lets me know there's more of a bearish flare than bullish flare. It was VXX, the second biggest gainer, and obviously this is synthetically inverse due to it being the relationship it has with the market. SPY up, VIX down typically. So this actually had a solid week of 5%. It was up 6.7 today. So you got to understand it was up and down, a lot of zigzags. But look where we've been. I've said VXX is going to 49. I want to see it get to that level. We are at 49.5 today. So I think this has a little bit more to climb. I don't think it takes off. I potentially see it getting to about 52, 53, and that to me will mark we've done a little bit too much panicking, and that's when I'll look to do some more buying. If I'm using buying and trying to use this for a kind of a timing mechanism, I want this to clear a little bit higher. And again, don't forget, with the election day, that fear, right before the election, we peaked at about 58. And then that Christmas week, the fear right after the Fed cut, we got to about 57. I think this next one will take us to about 53 or so, 52, 53. And I'll look for that in the coming 2 weeks or so. All right. And the only other week, so the leaders this week was Nat Gas up 8.5%. This thing, VXX, up 5%. And the next one, and this is totally, we're talking about positioning, it was the martial law story, South Korea, coming off a 50-week low. We said, look out for a vicious bounce. It's probably going to happen. This was one of the best areas to be in the market this week. It was literally Nat Gas, volatility, and South Korea. South Korea up 4.5% this week, even with it down 1.5% today. Let me see here if that's enough for a sale. I would want to see where this trades into next week, just due to a little bit. I mean, I wouldn't want to say the continued strength it has, because it has some ugly days this week since trying to get to 54.60. But I want to see how much it can clear and hold above 53.5. And then potentially, if you could get a sniff at a 54 handle, that would be a wonderful entry for a short down to about that 51 level. But I don't think the worst is over for South Korea. An interesting and a sharp pop up, though, from oversold conditions to 50 RSI. You don't see that often. A very, very mighty bounce from 51 all the way to 54 in South Korea. So an impressive week, if you call that this week, up almost 1% a day with significant give back today. All right, so those were the areas to the upside. If you made money long, there's a good chance it came from Nat Gas in ETF land, Nat Gas, volatility, and South Korea. Not a lot of ton of areas. Keep in mind, the S&P was down 70 bips this week, so down, but not massively. The losers of the past 5 days, the big losers, MCHI. This is very similar to China or to FXI. It is China down 5% this week, down 2.7 today. So we said KWEB's had quite some time already under the 200-day moving average. So MCHI just began. The test begins. It closed above the 200-day. I see here on the 8th. So today is day one for China as viewed through the MCHI ETF. This is very liquid as well. Don't like to see that oversold conditions here combined. You always want to mix qualitative and quantitative data. So when I see new, again, so we're giving back the gap the day they announced their stimulus. That's not great. That has been all given back. So potentially they need more money, more stimulus, and it's going to take longer. Combined with new lows in the RSI, even when China was a dog, I mean, we only had one print this year on the 22nd, and it bounced back. This looks like it could be a little bit longer. We'll see. But not a lot of great things here. I don't like to see new RSI lows combined with a first initial close under the 200-day moving average. And you're 3 months removed from 52-week high. Doesn't give me warm fuzzies. It's funny because I had said last week I think your risk is contained on MCHI. I don't think you're going to have a ton of downside. I thought it would bottom, though. I wanted to see how it would do around 45 even. I thought it would hold. Hence, that similar to how we're seeing the Trump bump, I thought this would hold this the stimulus announcement, and it gave way. I think the similar thing is going to happen with the S&P. We'll see what happens here. I think bounces potentially come in this group, and it gets to 46.5. So that would be a monster move. Be on the lookout. I think it potentially does happen, though, and it's going to get you a heck of a rally to about 46. Be patient, though. It might take 2-3 weeks, and I think it might be short-lived. There's going to be folks that want to take a flyer on this after how far it's come. So look to China. It was a big mover this week, down 5%, average almost one a day, and quite a bit of capitulation given throwing in the towel, down 2.7. All right, keeping on. I know it's Friday afternoon. Folks want to get a beer, I'm sure. I know I do. Next one, but we said no repeating charts. The next worst area was India, down 4%. We already looked at that chart, and that's been on the 200-day. So you can see how this, almost a flywheel of self-fulfilling prophecy, just weaker momentum begets more weak momentum. And then the next area, I haven't looked at this chart in a while, actually, and I am no longer in the position. Uranium, the third worst week, down 3.5%. Again, so stuff is happening in the market. This is also having its own sea change, having a battle with the 200-day moving average, which is a 10-month quantitative, a consensus agreement upon a value, 29 quarter in this case. So the clock starts for this. I mean, I'm not even going to really give this a close. I closed at the 200-day. So for me, this started December 16th. I want to see where this is by the end of January. This 29 quarter resistance looks heavy. It hasn't closed above it since December 13th. Oversold conditions just last week. Don't. Look at the chart here. I don't like. I think it's in a distribution phase for the next 2 weeks with a low around $26. I think this 200-day moving average will be continuing to remain to be overhead resistance. So nasty weeks in China, India, and uranium. Top 3 trades of the past 5 days. If you're long nat gas, you collected 8.5%. Congratulations. If you're long volatility, congrats. That was up 5% through VXX. And if you were short China through MCHI, congrats. You got 5%, and you absolutely crushed it. Now, I would like doing this more and more. The top 3 trades of the past 52 weeks. And the numbers have changed, obviously, because we do 52 weeks to 52 weeks. It is GBTC, obviously still your leader, and it's up 86%. Some of the numbers here, obviously, because of the roll-off, we're doing Jan 10, 2024 through Jan 10, 2025. Your GBTC is up 86%. You see what's happening with Bitcoin. People are concerned. It went to 93K. I mean, give me a break. So through the lens of GBTC, $86 December 17th. We are now trading at $75. It looks like it had some fits and starts. Here in the near term, I still like it. It's doing, honestly, everything it should do. I would like to see it hold. So the 21-day exponential moving average for this is 76.60. I would have liked to have seen that hold a couple more sessions in the past week. It's where my cursor is. But I still do think the target in the next 2 weeks or so is still about $81 on this. So potentially inside the 52-week highs or all-time highs, for 108K in Bitcoin land. I'm not so sure it takes that. It looks like it's basing quite a bit here. If you look at the Bollinger Bands, are starting to narrow, which is pretty rare thing that you see in GBTC, and still holding roughly 50 RSI. This has not been really taken out to the woodshed since mid-September. I love that view pre and post election being held in high regard. and still with quite a nice slope to its 200-day moving average. I still think you accumulate it if you buy it under 77. Great job. I think that is well warranted, and I think you can set your targets at around $81, and on the higher end, $86, $84 to $86. But you have to be patient. It's going to take about 2 to 3 weeks, I think, for a crazy mover like this. The number one leader of the past year, you got to give it the benefit of the doubt. It's going to be Saquon on Sunday. It is Saquon. Every Sunday is Bitcoin. That's that plus 86% from last Jan 10 number. Number two, you ask, still here, still the leader, or second runner-up, actually. Semiconductors up 43%, or half the gain of GBTC. And that makes a bit of sense. GBTC is like a 60 vol. Semiconductors are actually quite less than half of that. So, technically, if you think about it, risk adjusted, you get paid more going along semiconductors. So you should weight less assets into Bitcoin. But I'll leave that for you. So basically, what I was writing about in Chart Advisor, exactly what happened. Buy it buy it as close as possible to 242. That 200-day moving average, I said it's going to get to about probably 260, tops 265. It got 264, crapped out. You heard what Jensen Huang said, and now it's gotten all the way back down to 247. Now what? Do we play this whole charade all over again? Yeah, kind of. So I think more so to the downside. Like I said, I don't have warm fuzzies over the market for the next 2 weeks, sideways to down, but all encompassing probably 1% from here for the S&P, but it's going to be frustrating. Yeah, I see this probably going towards, I think this is going to really piss off investors in the next 2 weeks. I think this is actually going to go below the 200-day moving average of 242 even, and that's going to be cause for concern for some people. I think it actually could get as low as 238, right around here. I think it probably, people are going to be concerned if it's going to break under this 234. I think would be concerning. I think it has a shot to do it. If it does that, then we're going back to the September levels. I think that's a possibility. So prepare for headwinds for semiconductors over the short term. I don't think it's going to be in massive favor. I think the glow is going to be off of NVIDIA just for a little bit, and this will break the 200-day moving average. It's going to scare some people. I still think you should remain long, but it's going to test your patience. So this is the second best area of the year after Bitcoin, GBTC, and then third, I'm just going to put it up just to give it the respect it deserves, but we already highlighted it, so I'm not going to go into the engine as we will. But out of the names we just said, Bitcoin, semiconductors, and Jets, which has a 52-week high today with momentum today, it's Jets. And again, look at the 50 RSI, just a simple mark of it being in and out of favor of the market. And this is how the premium in terms of trading prices since mid to late August. So you'll love to see it. It was a dog before that, literally 3 months on, 3 months off. So the 3 months prior going into August, a dog and squeaking out a 52-week low. But since then, just great performance. If you can get in around 25, 40, that would be a great entry. And I think this is going to be a good area for the year. You saw what the CEO comments were saying. I don't really love to pay attention to fundamentals, but sometimes they do drive the technicals and vice versa. And when you have like Ed Bastian and those CEOs saying that there's ripping demand, especially they're getting some more international demand, it bodes well. And again, not many areas in the marketplace today have that. And that's small. This part is just a small up 1.7%. This is what I'm looking at, and that's the caret signifying a 52-week high. So not many areas doing that today. Okay, we are outie. Go Birds, fly Eagles fly, and peace.